For years, the conversation around South Africa's electricity grid has started and ended with a single phrase: load shedding. The national narrative has been defined by rolling blackouts and the daily struggle to keep businesses running on backup generators and candlelight. Capital markets took notice. Institutional investors began categorizing this chronic energy deficit as one of the primary risks to the country's overall macroeconomic stability. But a recent announcement at the 6th South Africa Investment Conference signals a departure from that historical baseline. The presidency confirmed that Seriti Green is injecting 10 billion rand directly into domestic renewable energy infrastructure. Crucially, this capital commitment coincides precisely with the start of commercial operations at the Ummbila Emoyeni wind energy facility. Pairing a 10 billion rand capital injection with immediate operational execution marks a move toward a new industrial strategy. Renewable energy is moving from a utility fix into a pillar of long-term economic growth. Financial markets heavily discount future promises. They allocate capital based on completed operational infrastructure that generates predictable returns. By bringing the Ummbila Emoyeni facility online simultaneously with the new funding announcement, developers prove to institutional investors that large-scale South African renewable projects are fully bankable today. Project execution relies on the region's geographical strengths. As seen here, the dry landscape offers some of the highest-yield natural wind and solar resources, allowing for exceptionally efficient energy capture across the grid. Backing up those natural resources is a highly capable domestic financial sector. Infrastructure finance requires deep capital markets, and South Africa's banking hubs are already built to handle complex, multi-billion rand syndications. Add to this an ongoing series of aggressive energy market reforms, which are actively stripping away red tape and expanding the private sector's ability to generate and sell electricity. When you converge elite natural resources, sophisticated financial architecture, and open market reform, energy security ceases to be a sovereign risk. It becomes a magnet for international capital. The actual value of a renewable asset is found in the sprawling industrial supply chain required to build and maintain it. A single facility acts as a central node, immediately requiring heavy engineering, specialized manufacturing, and logistics. These primary sectors require support: commercial construction, specialized financial services, and extensive digital networks. Zooming out, one major operational asset sustains entire networks of local contractors and suppliers. Under the old model of chronic energy deficits, capital was paralyzed by uncertainty, and job creation stagnated. This multi-layered ecosystem proves that building out renewable capacity achieves a dual mandate. It balances the electrical grid, and it constructs a foundational engine for comprehensive industrial growth. As these massive projects move from the planning phase to full operation, renewable energy execution is maturing into a core competitive pillar for the entire economy. We can compare this emerging capability directly to the country's traditional economic engines. For over a century, heavy mining formed the nation's industrial bedrock. Now, a new layer of highly specialized expertise is accumulating. Through these massive builds, domestic firms are mastering complex project finance, cutting-edge grid integration, and large-scale environmental management. The ultimate strategic destination for this expertise extends well beyond domestic borders. As neighboring nations pursue their own transitions, South Africa is positioning itself to export this specialized knowledge across the continent. For investors and government decision-makers, the lesson here is entirely about execution. Long-term economic competitiveness is built on consistently delivering operational infrastructure rather than announcing future financial pledges. With physical assets coming online and an entire supply chain activating behind them, Seriti Green's 10 billion rand investment serves as the definitive blueprint for South Africa's next era of global competitiveness.